Hey everyone, this is 8-Bit Penis, and this is Ownership Podcast, Season 1, Episode 10. Today we have a very exciting episode, somebody who I've been wanting to have on for a long time, and we finally made it happen. Today we have Ranga here from Solomon Labs. Welcome.
Hey, thanks, 8-Bit. I need to first off say 8-Bit is one of the most patient hosts I've ever met. We've been trying to set this up for the past, I think, 2 months. And thank you, 8-Bit, for accommodating my schedule.
Well, that's my job, so I'm very happy to do that. I think we can just dive straight into the crux of it. So, yeah, man.
Let's do it.
Can you tell me a little bit about your journey, just generally into like how you got started with crypto? And I'm just curious how you got, like, how did you even come across crypto? How did you come across Solana, MetaDAO, and all those things? Like, how did that happen?
Yeah, this might age me a little bit, but I'll talk about my pre-crypto career and then kind of describe how I landed in the space. My first corporate job, you could call it, was actually while I was in college, working. I got an internship co-op at BlackBerry. This was back in its heyday when it was at its peak. And I got to basically be a software programmer, working mostly on quality-related stuff, and then working on the new products that BlackBerry was releasing. That was sort of in its peak. And then around that time was when I discovered Bitcoin, and it was mostly out of intrigue around the idea of like, hey, you have this internet dollar or type of currency that you can transact. Most people were using it for things like Silk Road and whatnot. So I started paying attention to that space. This was already probably around 2012, 2013. And then I first purchased, my first purchase of Bitcoin was, I think, around 2013 and 2014. And so that's what intrigued me. I read the Bitcoin paper. I love the simplicity of it. I love the concept of it. And, I kind of set it aside outside of just holding some Bitcoin and using it for other things on the internet. And I focused mostly on my career. So after BlackBerry, I went back to school and finished my degree in electrical and biomedical engineering. My career was started off building airport systems, specifically baggage handling systems and control systems for airports. I was flying airport to airport, doing that. And this was around 2014, 2015. And right around there, I started hearing about Ethereum, the idea of programmability around tokens and this concept of currencies and really the core concept of smart contracts. And I was sort of instantly hooked, this idea that you could just create financial systems online or on the internet, and they would just work out of the box. And this was around 2015, 16, 17. 2017 is when I sort of took a deeper dive. I had my first startup, which was a protocol called XiWATT. And this was about democratizing ownership of renewable energy assets and bringing renewable energy yields on chain. You can think of it in an early form of RWA, a bit too early for its time, but it went really well. We actually had one of the earliest investments from a VC, and we ran some pilot projects out of California and Brazil. That eventually closed up shop around 2019. And then I went off and continued my traditional career. I was working as a senior staff engineer developing the Common Industrial Protocol, which was short for SIP for those who might be familiar, or more common implementation of it is Ethernet IP. So this is the protocol that essentially most industrial devices, PLCs, whatnot, run on, the language that they speak. So I had this really great opportunity to work on these critical systems and standards and protocols. And that background eventually led me back into focusing on standards and protocols and things of that nature related to crypto. And I dived back into crypto around 2021 within the NFT space. And then around 24, 25 is when I started thinking about how we could build a better dollar. And I can kind of dive into that after. But yeah, that's a short history.
Very cool. So you are sort of an OG. You're sort of an OG. As somebody, so you've mentioned that you've ran a startup before, so you've had kind of a lot of experience, I would say, with raising money and just running a company. When you first saw MetaDAO, what did you think? How did you get approached by Prophet or Colin? I'm wondering how that first conversation went on you raising on MetaDAO and how that's go.
So we came across Prophet. I didn't know about MetaDAO till probably it was early last year in 25. I think Prophet was at a breakpoint or accelerate in New York, or I can't remember what it was. I wasn't actually there. Steven was there, and another colleague of mine. They ran into Prophet. So I'd heard about MetaDAO. I didn't really do a deep dive into what MetaDAO was, what Futarchy was. I just heard inklings of it. And I kind of monitored from the outside. I saw when OmniPair launched and a few of the other projects. And at that time, we were deciding, how are we going to announce ourselves as Solomon? How are we going to bring this stablecoin to the world? Like, how are we going to get customers, first users, etc.? And at that time, the last 5 years of crypto was mostly around the playbook of, you do a VC round, you raise at a pretty good valuation, and then, you launch at a high FDV with a low float, and then you vest out, and sort of this common playbook that you saw repeated over and over again. And by that time, I had pretty strong conviction that that playbook was dead, and that's not the route that I wanted to go. So that's when I started looking into MetaDAO and understanding really what the core of what was being built. I guess more around the spirit of it. So like in terms of the mechanics and the game theory and whatnot of how decisions market work, that was really like intellectually stimulating. But from running a business perspective, I don't think any founder really is eager to have anyone or anything tell them how to run the business. So from the spirit of what MetaDAO was building, I was completely aligned from sort of the day I read about it, just because having experienced the ICO craze in 2017 and then seeing sort of the massive amounts of grift that occurred in our industry around tokens and all of the sort of backdoor deals around tokens and how they work. I was completely aligned with the idea of having real value accrual to the token, and then B, alignment between the holders of your token and you yourself, as in you win only if you get value to accrue to the token and you get the token to perform well, right? Like more aligned with what you would see traditionally in like an equity investment in the real world. So in that way, I was really intrigued, and I contacted Prophet. I sent him a DM, or I had someone introduce us, and then we hopped in a group chat, and within sort of 5 minutes, Prophet said, "Hey, can you talk now?" And so we got on a call. We started, we introduced ourselves and then talked about our projects. We sort of pitched each other, and then he was pitching me on why we should launch on MetaDAO, and then I was pitching him on why Solomon is the right project to launch on MetaDAO, and the rest is history.
Yeah. So you guys launched last year. Was it in November?
Yeah, it was
something like that.
Yeah, it was late November, I believe, sometime mid to late November.
How did you feel the day that you saw? I believe like the Solomon raise had quite a lot of capital committed. How did that whole experience go? Like, I'm wondering if, until the raise, it kind of floats around like, yeah, we're gonna raise some money and it's gonna go, how it's gonna go, and then, one day later or like 4 days later, you see this huge amount of capital committed. What was going through your mind there?
I didn't sleep for most of those days. So by the time we closed, I almost didn't, I don't think I felt much. I literally got on a call with Prophet and Colin right after we closed, and we started talking about what's next. But those 3 days or leading up to the launch or the raise and then conducting the raise, those were probably the most interesting days of my life in some ways. If you recall, the previous projects had some of them had high amounts of commits. So I was expecting that we would probably get a certain amount of commits, well over what we were looking for in terms of our target. Obviously, I didn't know to what degree, but there was also this other, I guess you could say, a secondary market that was active during our raise, and that was the Polymarket. And so when we first launched or opened the raise, a Polymarket was up betting on whether we would raise an X amount of capital, like starting from, I think it was like 10 million all the way up to 100 million or so. And within a day or so, there was a campaign started by a certain cabal claiming I was this other individual that was part of some other project and was arrested in Amsterdam, and this was some sort of rug that I was attempting. And the Polymarket bets, the odds started to really collapse, and then I started getting a lot of DMs saying, "Hey, you should go out there and clarify this and clear your name, explain you're not this individual that they're claiming to be." And so there was a lot of drama leading up to the last day. And I think the night before the raise was supposed to close, I got a DM from one of the Polymarket bettors, and they said, "I've infiltrated the quote unquote cabal that was orchestrating this FUD campaign, and they've notified me that they'll be taking down the DDoS attacking the site and shut it down prior to the close." And I kind of brushed it off with a grain of salt, but I did message Colin that, hey, someone's going to attempt this. At that point, I think our target was 2 million. We had about 5 million commits or 6 million, I can't recall, the night before. And so the morning of the largest Cloudflare outage occurred. And so the site went down, and there were jokes about how the cabal took down the internet in order to take out the Solomon raise, in order to win some Polymarket bets. Obviously, it was a joke, but it created a little bit of FOMO. And then they did start to attack the sites that were being put up in lieu of that. With Colin was fighting that pretty hard, but I think that actually attracted more attention. And then I think within a few hours prior to close, we jumped from about 15 million committed all the way to 100 million. And it's quite eventful. In those 3 days, I was probably on a number of podcast interviews talking about Solomon. and just talking to funds and other investors.
And how has the experience been since then? Like, have you had a good experience with token holders? There's this, maybe it's a myth, but I think there's some truth to it, most definitely. Like, once you launch a token, you're kind of eternally going to get some people, angry in your DMs. And so there's a lot of people who say just never launch a token.
Mm-hmm.
What do you think about that? Like, do you think the token creates more alignment? Do you think that has helped you guys shape Solomon to be what it is today?
I think having a live token, it really, you benefit most if you're in a position where you're launching a product or a service or something that is catered to retail consumer. And there you can, similar to Avicii, right? They had a live product and they were able to accelerate their growth because now you have this attention, and then you have alignment between people who own a part of your company and then want to use your product, right? So that's like a clear fit in terms of how you take advantage of a live token. We had similar plans when we first, or that was the original plan, which was like, hey, we're going to, take a month or so and then launch or go public with our stablecoin in terms of accessibility. But a few things changed for us, and that forced us to sort of step back and reevaluate, and I would say a minor pivot in terms of our rollout strategy. So that plan didn't go according to it didn't go according to plan, and because of that, I don't think we were able to take advantage of the initial surge of attention and then potential alignment that you could get from having a live token. But the last few months have shown that once you sort of get rid of, or a lot of the early short-term aligned token holders are kind of leave or find themselves out, you get holders that are actually aligned and that want to see you win. And a lot of that is sort of, it happens naturally as sort of the token matures. But a lot of that was also done through active management of the community and active engagement.
I think that's a perfect segue into one of the most interesting topics that has been happening around Solomon, or has happened around Solomon and decision markets. So I think I really want to take just a couple minutes to talk about your proposals that you guys have had so far and what your experience has been with those, especially the last one, because I think it had the most volume out of all the decision markets in MetaDAO, if I'm not mistaken. But,
by some margin. Yeah. So MetaDAO, one of the value props of MetaDAO is that the amount of capital that you raise is held, the Treasuries held in a wallet that is controlled essentially or governed by Futarchy. And so teams don't have direct access to this capital. They have an OpEx budget. Anyone who's watching this podcast probably obviously understands that. One of the core reasons we raised a larger amount of capital was we were planning on using this capital to seed initial liquidity for our stablecoin. So like a stablecoin business in general has really high capital requirements. Things like liquidity, B, negotiating terms and agreements with, for example, in our case, like custody providers or venues. So that was the justification for raising greater than the runway we actually needed, which was probably around 2 to 3 million for the next couple of years. So the proposals were lined up in a way that that would give guidelines and controls about how we would deploy this liquidity. And there was a series of proposals. There was proposal 1, 2, and 3. The first one was setting up the framework for it. The second one was creating a Treasury subcommittee that would govern a multi-sig in order to deploy the liquidity. And then the third one was the actual movement of the capital from the existing wallet to this multi-sig that was governed by the subcommittee. The third one was also an omnibus, or we called it a gigabus proposal. There was a number of other provisions in there. Mostly that was just to clean up things and to set up all of the governance structures. We've been very deliberate about how we've structured things from a governance perspective, just because I think historically in crypto, DAOs have done, they eventually, one way or another, the successful ones recreate similar structures to like successful governance in traditional businesses. They just take a long time to get there, and it's often very messy. We decided to be very deliberate about the governance structures, about, what does it mean to be a member? What does it mean to be a token holder? What are the rights they have? What is allowed, is not allowed? And essentially, the charter for the DAO. So that was all set up and proposed in proposal 3, and we had drafted. We've put up the draft for a couple of days, let everyone review, and then when the token or the proposal went live, we saw a lot of, not a lot of, I think it was mostly 1 or 2 users that started to trade against it, but we didn't have any insight into who this person was or entity. I went around DMing everyone, trying to message in Telegram and our community channels, asking for the individual or person to come forward so we could talk about what they were opposed to. Eventually, we were able to get a hold of them. We got on a call, and we were able to work through all of their concerns. And by the end of that conversation, they were bullish on Solomon, and actually near the end of when the proposal was closing, or the decision markets were closing, they actually started to trade for passing that proposal. The proposal ended up having over 2.7 million in volume traded. And that's, I think, significantly higher than the previous most contested or traded decision market in MetaDAO history, or any decision market history.
So what learnings do you get from that experience? It feels like after such a huge event, you may be the decision market expert. So what do you think was missing in there? So for anybody who doesn't know, I think one of the biggest, I guess, issues that somebody could have found with it is that a lot of the treasury, or most of it, got transferred out of the decision market authority into this multi-sig. So what was it that made the guy flip, and what do you think you can do better in the future to make sure that this doesn't happen again? Or do you just sort of see this as a positive of decision markets, where it sort of forced this agreement to happen?
In terms of our own learnings, it was, one, we didn't expect the opposition, or we didn't expect anyone to come out and oppose it, just because the first 2 proposals were lined up, and we were openly talking about this for some time, and then the draft was up for a day or 2 prior to the actual launch, and then there's a 24-hour period for review before the decision markets start to actually count towards the TWAP becomes active. So we were like, the first lesson was prepare for the unexpected, and have tooling ready to understand how to trade these markets. There's only really a handful of individuals, I would say, that understand how to trade thea markets. Thea is one of probably the strongest in this regard. And so, like, our own learnings was we probably, or anyone that's operating within the structure should work very closely with their backers and actually have plans and alignment in place before any potential big proposal goes up, just so they can come in and actively trade it. So when our third proposal went up and someone started trading against it, the proposal went live in the evening or something, and then someone started trading it against it sort of later in the evening through the middle of the night. And I started to, that morning, I contacted all of our large backers and I explained the situation. And then it was an opportunity for me to give them an actual update, like a more in-depth update of what Solomon was doing and what why they should be aligned with Solomon. So that presented an opportunity to bring them up to speed and then also give them a reason to be bullish on Solomon. And that worked really well. We did that. I spent hours that morning just back to back meetings with all of the major holders. And then they're actually the ones who eventually came in and started to trade for it and helped pass the proposal. So learnings wise, be actively engaged with your backers and make sure that they actually know how to trade those proposals too, and have the infrastructure ready or to actually to trade. We actually built some tooling to allow you to project and to sort of, in a theoretical sense, like trade proposals as well, to see what it would take to pass a proposal, or sort of the hypotheticals that can exist as you make or trade these proposals. There's we've open sourced that. So those were sort of the learnings, which is just, hey, make sure you have alignment from your backers, make sure you coordinate with them, and then be prepared for the unexpected, even if you think there's open transparency around you having explained what these proposals are.
Yeah, I think that makes a lot of sense. And I think I do have another question. I think the last question regarding this proposal, but I just really find it so fascinating. It is a historical moment. So a lot of people have this criticism of ownership coins and MetaDAO, and you already kind of touched on this. Like, as a startup, you need the flexibility. You need investors to let you pivot if you need to.
Yeah.
Do you feel that pressure, especially after this proposal? Like, do you think it's constraining you too much?
No, I don't. I mean, so the way I view it is that it's a trade-off, right? If you have a live token, if you're working within this framework, it allowed us to do certain things, and there's a trade-off on that. And I think MetaDAO is maturing in a way or in a direction that's solving a lot of the initial problems that existed around this. One of them is just simply, those who are raising should probably have very good or clear insight on who is on your cap table. So even choosing the investors, right? You want aligned investors, and you want an aligned cap table, and that removes a lot of the friction to begin with, right? Or some of the problems that we faced, which was that we didn't even know for certain who was on the cap table. We knew some of the bigger investors, and some of the investors I meet randomly, they'll come up to me and say, "Hey, I'm a big solo holder. Like I own like 1% of the supply or something, or 2%." And then it's like, oh, it would have been wonderful if I knew that and I would have engaged with you earlier. So I think a lot of the friction or the pain points are mostly around problems that arise from having misaligned cap table when projects were raising. And if you just fix that, and if you set up the initial expectations to be, hey, you're investing in a company or you're participating within this framework. These are the rules, these are guidelines, and this is what can happen or can't happen. Yeah, like a lot of this sort of fixes itself. So this proposal was controversial mostly because we didn't know who was on the cap table and we didn't know who would oppose it. But if we were launching again on MetaDAO, we would have the ability to select who our backers are, leave certain amount of allocation to retail, for example, maybe 10% or 5%. And the rest, we would have sort of very clear alignment and transparency around what we're building and what we need to do. And I think it would be less, a lot less friction in that process.
I mean, I totally agree. I think the new wave of the MetaDAO updates have been really great, and I'm very happy that they are taking this path to finally make it a little bit more founder friendly and not over-index on being investor friendly. So
yeah.
Yeah.
On that note, like I mean, I understand, or there was a huge need for the pendulum to sort of shift this way back to investor protections, just because of the history of how tokens have played out over the course of the last 10 years or so, right? That is very understandable. But the bottleneck is really about who can MetaDAO attract great founders. And because a great founder will really have no trouble raising capital from wherever they, from traditional means. And so a great founder who has a consumer product or retail product that could benefit from a live token, you need to make it as friendly as possible for that founder to want to choose MetaDAO and have this token live, so they can gain the benefits having this live token. Yeah, but I understand the history of like tokens in a very deep sense, because I've invested heavily in the ICO era and in the 2020s, and the amount of sort of angel checks that have sort of completely disappeared, right? In a way where there was no transparency. Yeah, it's totally understandable.
Yep. Okay, so now I want to segue into the next segment, which I just want to talk a little bit about Solomon and stable coins and stuff like that. So in 1 minute, what is Solomon?
Yeah, so Solomon is building at the highest level. What we're doing is we're building the infrastructure layer for productive dollars. And our first proof point of this is USDv, which is a stable coin that we're issuing. And this stable coin allows you to earn without having to wrap, stake, or lock up or put your stable coin into a vault. And what this means is that you can earn what we would describe as sort of the base rate or the risk-free rate without changing the composability of the dollar. So your dollar will remain a dollar. It'll be fully liquid, fully spendable, and always earning without you having to change any of the UX. And the way we make this possible is by separating out the earn layer from the dollar itself. And this means that you can now have this dollar that is fully spendable, fully liquid, always earning. And that's enabled by infrastructure that we've built called Yield as a Service, or YaaS for short. And you can think of YaaS as a programmatic monetary policy layer that allows for the routing of economics based on policy. So that's a generalized, standardized infrastructure layer that allows for the routing of economics based on policy, and it enables for USDv to function as a dollar while routing rewards separately in a way that can comply with any set of policies.
Thank you. That was really good. One concern that I see with just, and this is not specific to Solomon, but any stable coin, is it backed? How much of it is backed? Where does the yield come from? Like, I feel like recently we've had so many DeFi exploits. Throughout the years, we've had many DPEGs. So I'm wondering, how is USDv or how's Solomon solving all these problems, and how's it different from every other stable coin out there?
Right. Yeah. I'll answer that. Just the short answer in terms of what USDv is it's fully backed by
By the
other
way,
stable.
feel free to go into detail.
Okay. All right. So um, I guess I'll actually start with sort of a lot of the questions that you're asking relate directly to questions of how dollars and money has existed throughout history. And the same questions and concerns have sort of played out historically. And now we're just playing these out on the internet, on chain. So like if you think about what money was in the United States, just a couple of 100 years ago, there was a period when, for example, banks would issue private money, right? And they would issue these banknotes that were collateralized by, state bonds or other assets, and it would be a local currency that would be traded. And there was actually all types of concerns around the quality of reserves that were backing these banknotes. There would actually be sometimes discounts at which these banknotes would trade. So like a banknote in Michigan would trade at a discount to a banknote issued in New York. And some of that is due to essentially like redeemability, like the ease of which you can redeem these banknotes. So in a lot of ways, like stable coins as they exist on chain now are parallel that, right? Like you have companies that are actually issuing IOUs in the form of a token, and they're backed by reserves. The Genius Act, has standardized what that means if you want to be a payment stablecoin. So now payment stablecoins are backed by Treasury bills, right? And so the history of like on-chain dollars has been one of people trying to issue these stable coins and create creative ways of issuing this stable coin. There's been like over collateralized stable coins like MakerDAO's model, or even before that, there was BitUSD and Bitwise. And then we had Tether, where there was a lot of uncertainty around what is actually backing USDT for a while, especially in the late 2010s. And that's where USDC sort of stepped in, had very clear transparency around the backing of USDC. And then we eventually got Genius Act, and now we have these Genius Act compliant stable coins that are fully backed by T-bills and other stables. So to now answer your question about what is USDv backed by, USDv is backed by Treasury bills, short-dated Treasury bills, and other stable coins. And it is fully liquid, meaning that at any point you can go from USDv to USDC or USDT or USDG. There's going to be a secondary market that allows you to freely trade between these stables. And then for certain authorized parties, they will have direct mint and redeem functionality available to them. The idea here is that, historically, you've had stable coins that have had are algorithmic, where from the very beginning, there was an element of sort of belief around the backing, or it was a reflexive nature of how these tokens or stablecoins were backed, like in the case of Luna and UST, where it was very clear from the beginning that these are not sustainable models or sustainable stablecoins. And then you had, unfortunately, like I guess the nomenclature on stablecoins have become very difficult to sort of like shift through. So you have a lot of stable coins, or tokens that are called stable coins, which are actually just tokenized funds where they represent some amount of value that exists somewhere else, and they sort of actually drift in value as well as you earn yield, or as the exchange rate determines the value of that token. And so there have been many cases where the value or the reserve or whatever is backing this token lives off chain somewhere, and there's no transparency, and that blows up, and then eventually this position unwinds, and there's some sort of contagion effect. So we've had all different types of stable coins, and part of the problem is that we don't actually have a standard definition for stable coins and what they mean. And Genius Act is actually one way to move that forward in terms of what is a dollar on chain, what is what does it mean to have a dollar represented on chain, and what the backing of that should be. So in USDV's case, treasury bills and other stables back it. It's 100% collateralized. You would have full transparency around what amount backs X amount of USDV on chain.
I also remember, and I know you guys mentioned recently that you're moving away from the sUSDv model and the basis trade and more into the treasury. Could you walk me through on why you're taking that decision, and whether, like, what made you take that decision?
Yeah, this kind of plays into that original shift or pivot that we did early on, which was when we were first launching Solomon. The plan was to have the backing be based on a basis trade. So basis trade is essentially, basically a holding spot long, and then an equivalent amount you're shorting in the perps market. And you collect the funding rate, and that's your source of yield. And we were doing that through a segregated custody, through Cefu, and then operating on Binance. Past October 10th, when we had the major dislocations, the basis trade, the yields completely compressed, and really you couldn't justify running the basis trade anymore because you were earning equivalent to what the T-bill rate was, around 3 to 4%. Most people thought that the yields would tick back up after October 10th, but they never really recovered. And a lot of that is due to crowding and the amount of people running the same strategy. And a lot of that is also that now people are using collateral that is T-bills, so they're earning this base rate to begin with, and there's a general compression of running this strategy. So the original model was, hey, we would have this sort of yield that we believed was the best risk-adjusted return, averaging between 8 to 12%, and we could offer that as a yield for those who wanted to access it through this permissionless nature, which was the staked version of the USDV. And then we would have USDV as the stable coin, and we would use our YaaS infrastructure to route rewards or yield to USDV based on policy and to determine, that would define who is eligible or who's not eligible, or set policy to define who is eligible and who's not eligible. So that was, long-winded, but the original plan was to continue that model of the two-token model, which was USDV and then a staked version of USDV. Staked version was this permissionless way you could access yield, and you would lock up for 7 days. The USDV would be the stable coin that you use, And then for certain people, they could earn yield in a permissionless, through our YaaS infrastructure, we would route the yield right to their wallet. And once we saw that rates or the returns didn't make sense, and we also started having deeper conversations with people who would want to use USDv, they all felt that, hey, the maximum amount of risk that we really want to take on is equivalent to something like USDC or USDT, which is downstream of the T-bills, right, or short-dated treasuries. And that is, the maximum risk that they want to take on. So we decided, given these, given the compression of the yields in the basis trade, plus what our customers actually want, let's just take this opportunity to completely move to the model that we originally wanted, which was a one token model, and access to yield for all through just USDv.
Tell me more about YaaS, because that's like my favorite thing about you guys. I think it's a really creative method, and I haven't really seen anyone use that. So I would love to learn more about it and how people can take advantage, or why this is, so revolutionary.
Right. Yeah. So YaaS really has, if describing it in one sentence, it's about the idea of routing economics based on policy. So it's about programmatic monetary policy. And what that means is that you can define who is owed what, under what basis, under what conditions, under what rules. And the reason this needs to exist is because right now, if you want to route economics on chain, there's very clunky instruments to do that. So you have staking mechanisms, you have vault mechanisms where you can define certain things, but these are really built for permissionless access in a way where there's sort of set standards and set ways people can access. But think about how, let's take, for example, something like dividend distribution, right? As assets come on chain, like stocks and equities, how and who is eligible for dividends, and how do you distribute these dividends? Traditionally, what you have is, a set of intermediaries that act as the distributors of dividends in the real world, right? It's a complex relationship between DTC, I believe, and then brokerages and whatnot, and where you hold stocks. And then there's sort of like the centralized ledger that accounts for who's holding what in terms of stocks and the type of stock that they hold, which is like common versus preferred. That all needs to exist on chain, and it doesn't exist right now. So this is the type of infrastructure that would cater to that. So that's sort of like a more getting further ahead of what this infrastructure caters to, but bringing that back to stablecoins for a minute. The idea here is that this infrastructure allows you to route yield or route rewards to stablecoin balances regardless of where they live. So that could be as simple as you as a user holding USDv in a wallet and holding a few $1,000s worth of USDv and earning rewards. Or it could be a market maker that has millions of dollars across multiple LP positions, and even, let's say, lending positions. We're able to understand these balances. We're able to attribute the yield or the economics that are owed to these balances, and then we're able to route and settle that economic based on policy. So that is really what YaaS is enabling, and we see stablecoins as the first place to show the capabilities of YaaS, and it is the largest market to target. But the general application for it is much, much greater.
Does that mean we're gonna get Solomon distributing dividends on chain? Is that is that what you're saying?
It is a very likely. I mean, if MetaDAO projects become successful enough and we get to the point of dividend distribution, yes, like we would be the infrastructure that would route dividends for. Futarchy would be the board essentially that decides, hey, there's a dividend distribution and it makes sense, right? And then, okay, well, how do you do the dividend distribution? How do you determine who's held what during what period and who is eligible, right? So this would be the infrastructure that would allow you to do that. We're seeing, now with tokenized stocks coming on chain, they all need similar infrastructure. But again, I don't want to get ahead of myself here. The core value prop for YaaS right now is in the stablecoin application and the routing of rewards and incentives and yield for stablecoins. And the clear sort of value prop there is, like, we see this as an evolution on improvement of stablecoins, right? Like stablecoins allow us to move money on chain. Well, what's unique about having a stablecoin or a dollar on chain is that now you can actually program economics alongside it, and this allows you to earn on the go without while still preserving the properties of that dollar, which is like a really unique and interesting use case that is only possible for dollars that live on chain.
Yeah, I'm I'm very excited for YaaS. I'm also very excited about way in the future seeing that dividends distribution through markets like that. That'd be very interesting. Now, about the future, how do you plan on scaling USDv? I think that's a very big hurdle that stablecoins have to get through is to actually be utilized as people putting their savings into the stablecoin, getting DeFi integrations. How do you plan? Like, what are Solomon's plans on getting a wider audience to allocate to it?
Yeah, I think this is so common mistake. I think a lot of stablecoin issuers or distributors or people who are trying to get stablecoin adoption is sort of, they try to get adoption in a horizontal way, like without a lot of depth. And I think that's a mistake. This is where MetaDAO, or this is one of the reasons we also launched in MetaDAO, was we saw that we could get usage for our stablecoin in a core set of for a core set of use cases and users, like right off the bat. So there are one of the unique aspects of the YaaS infrastructure is it caters exactly to the needs of MetaDAO treasuries. So right now, MetaDAO treasuries can't actually be actively managed without continuous sort of passing of proposals, et cetera, right? And also we want to maintain control over those treasuries via decision markets. So one of the things that YaaS enables is the ability to hold principal in one wallet and route economics or route the yield to another wallet. So if MetaDAO treasuries converted over to USDv, they can hold USDv as is, and then they can route the yield generated on that USDv directly to, let's say, the OPEX wallet. So going back to the go-to-market strategy and adoption, our view is that you need a core set of users and applications that are going to adopt this and have a lot of stickiness there. And then as you gain trust and as you gain TVL and as you gain sort of like time in the market, you can start to expand from there. And this also aligns with the core aspect of having a live token. All solo holders will be incentivized or will be driven or aligned to use USDv as their stablecoin. So between MetaDAO, a number of other partners that we are targeting, including some neobanks, and RWA issuers, we want to build a very strong core for adoption of USDv and carve out this market and then expand from there, instead of trying to be everywhere all at once. And in most cases, stablecoins have tried to pursue that strategy, have done it through heavy incentives and then sort of without any real returns.
I actually did want to ask about incentives because, as you mentioned, a lot of the stablecoins incentivize adoption through like these big, very, very large incentive programs. And, usually because they have millions and millions of dollars in the treasury that they can just spend. Do you think that's optimal? I feel like there has to be another way to get adoption than just throwing money at, I don't know, like a lending market or, something like that, especially if you're doing it with your native coin. So like I don't think if you threw Solomon, at like a DeFi protocol and users would gain Solo, they would just be incentivized to sell that instead of, being owners, if that makes sense. Maybe you can disagree with that, but I would love to get your thoughts.
No, I largely agree with you. I think the core problem, this also, like what you're describing, is mostly around the old playbook as well, because the idea for a long time was to get headline sort of numbers. So you would incentivize heavily to get really high TVL, let's say, right? And you're paying a pretty significant cost. But the reason that made sense for a lot of projects in the past was that they're eventually going to issue a token, right? And they're, investors and team get to in hopes of getting retails to look at those headlines and say, oh, they're growing very quickly, or they have this massive TVL. Eventually it's the idea is to dump, right? Like the whole strategy is about manufacturing these headlines and not really about long-term usage or stickiness or growth. And that's been a huge problem in the industry, not just for stablecoins, but any set of, any app that you're launching or any project or protocol. You're just looking for these headline numbers. I don't think any of that works anymore. I think here you have to be extremely careful about not getting farmed out, and you have to create strategies that actually force people, or not force people, but attract stickiness in a real usage way. So my general thinking is we will not have heavy incentives of that nature. We will not be, advertising 15% APY or 20% or something, and then distributing Solo. We have a few ways we want to target adoption of USDv, but in very particular corridors of distribution where we believe we will actually gain stickiness. So there may be some boosted rewards in those applications or in those use cases, but it'd have to show that there's clear stickiness there and a return on investment.
Do you think for stickiness and for user retention, do you think the best way is to get DeFi adoption or just people holding the coin, the USDv? I think that's something that I've wondered is like, like ultimately you want people to not just hold it, but you want them to, leverage it or, do all these types of strategies with it.
Yeah, I actually think playing, so just kind of touching back on that last point about, I actually think incentivizing can result in a net negative, even in terms of adoption. Because what you're training your users for is the idea of chasing yields and returns instead of actually using the product. So this is, again, goes back to the other conversation, which is like the unfortunate part about having everything be called stablecoins. And so people classify all stablecoins to be the same. And like everyone's just like the number, everyone looking as like, well, what yield is my stablecoin able to produce? And so people enter and exit positions based on returns, right? Our what we're saying for USDV, it is not the stable coin that you're chasing yield for. It is the stable coin that you default to. So in the same way that you hold USDC or you default back to USDC or USDT, but you don't actually get to get anything for that. There's no a return on that. There's no ability to earn on that natively. What we're saying is that, yes, you can go chase other yield, but whenever you want to come back to safety, hold USDV or use USDV as your default dollar, because the benefit is that you actually get to earn on it in a way that you kind of have rights over. That's like the other part of this whole equation. Like if you think about when you're holding USDT and USDC, you're already taking on the risk of the underlying reserves, right? You're already taking on the risk of the T-bill or the bonds or short-dated treasuries, but you don't get any of the benefits. And a lot of that is, maybe for legal reasons, but it's kind of insane to think that you're holding this asset, someone else is earning on it, and you're taking on the risk. And what we're saying is that, no, you have the right in I have to be careful about how I word this, but you should benefit from the reserves underlying this IOU that you're holding.
How does the Clarity Act and the Genius Act affect a stablecoin business like yours? Like, are you guys prepared for when the Clarity Act passes? And like, there's a lot of details in there that make it maybe harder or sometimes easier for certain stablecoins to do certain things. So how are you guys tackling that?
Yeah, we're actually uniquely positioned. A big part of YaaS, the infrastructure that we're building, is it allows us to define or set policies to define who is and isn't eligible for rewards or the ability to earn. So through this policy set, you could say, hey, in this jurisdiction, this holder does or does not get yield or rewards, or in this jurisdiction, they can earn yield through XYZ activity. So the way the Clarity Act is currently worded under Section 404 is that you can't have a passive bank-like deposit earn yield, right? Like, but you're allowed to earn rewards and yield based on bona fide activity. And that activity can actually be tied to what can be used to define that activity is the balance itself, and balance or activity transactions, etc. So it's a little bit vague in terms of the actual clarity on what is eligible and what is not, or what is allowed and what is not. And as it's worded right now, it states that within a year after the Clarity Act passes, there'll be further clarification on the types of things that will be allowed and not allowed. But going back to us, we benefit because there will be some set of rules that will need to be set. And our infrastructure allows you to set those rules. So whether that's for USDV or us using YaaS for USDV, or it's for other issuers and distributors that are issuing stablecoins that also need to define that policy. So yeah, we can be compliant to Clarity depending on the final language. Not depending, as in we can cater to whatever that final language looks like.
I think it's very great that we're finally getting some clarity. Also, although maybe not so much clarity on some other things, but I think it's just generally a very it's great to see the industry finally maturing and getting wider adoption, not just in these smaller niche circles, but overall. I think once most of these crypto bills pass, I think a lot of retail will start flowing in. How do you see like the future of stablecoin growth in just general society? How do you see the adoption going? I feel like, and this is like kind of a broad question. So just feel free to throw some thoughts out here. But it feels like for everyday life, it feels a little hard to integrate stable coins because of the old financial system and because of like everywhere you go, you got to pay with a MasterCard. And, they kind of support stable coins, but not really. So how do you think we can achieve a future, and how does Solomon contribute to that so that stablecoins are widely adopted, and I can tell my grandma to, hey, buy some USDv, get that sweet APY, get that YaaS.
I think that's an excellent question. Stablecoins are the most important product in crypto because in a lot of ways they are the least ideological, right? Like everyone uses money, everyone uses the dollar, right? And I just see stable coins as a natural evolution or progress on money, right? Like we've repeated a lot of these same questions that we're asking about what stable coins should look like and how they should work and what rules and regulations should exist. These have all been played out historically, right? Like from the very beginning, like things like when we first got paper money, like we got paper money in China and I think the Song Dynasty because metal coins were too heavy, right? We started getting the ideas around like reserves around because it was in England where you had goldsmiths issuing receipts to people who were keeping safe or who keep holding gold or other assets as for safety with these goldsmiths, and they started issuing sort of like IOU receipts, right? And people, instead of going back to the goldsmith and taking the gold and then transacting with the gold, they just started trading these IOUs, right? And so, like, if you look at all of this history has been about how do you make it easier and easier for people to transact, and we finally got the digital dollar, right? Through having these digital ledgers where banks could transact, etc. Then we started having all these companies sort of having internal credits that could transact. And in the US, these systems have advanced enough where we don't really feel any of the pain points. So like I can go to any store, I can use my credit card for stablecoin. I can use my credit card and I don't have to think about what's happening on the back end. The merchant might be paying some amount of fees. I may be absorbing some of that. There may be some cost benefit if we switched over to stable coins, maybe. But in general, I don't feel any pain points. Where people do feel pain points is really in places where there isn't that level of infrastructure and or money infrastructure, right? Money transaction infrastructure, or places where there's high inflation. Like dollarization is hugely important in those areas. A lot of people are transacting in USDT and other stable coins because they see it as a way to escape their local monetary sort of their monetary, their current sort of systems where they're forced to use other currencies. So in this world, outside of the US, you have a number of stablecoin issuers now that either have existing corridors of distribution or are now trying to carve out niche markets. They're all using stablecoins because it is a much simpler form of having money, right? Like just like you wouldn't trade cash and you would have digital credit. Now we've moved from digital credit that's locked in certain apps or certain banks. We've moved to this interop world of a global ledger in which we can operate or we can transact these stable coins. And there's a huge value prop there. So like but the next step here is we believe that just like you can start to freely transact, you should have a built-in mechanism to earn, and we can make these stable coins programmatic in a way that allows us to route economics. So this means someone in Argentina or Bolivia or the Philippines, not only now do they have a dollar they can use, but they now also have a savings account that they can tap into. So yeah, I just see this as an evolution or a progress of money. And stable coins are the frontier of that. And we see ourselves as the next step of programming economics around stable coins.
Yeah, to be honest, it's just talking about the history of money. It is so fascinating how, at least in America, back in the day, way back in the day, there used to be so many types of dollars. There were
Yep.
greenbacks. There were many types of different dollars, and each sort of region had their own type of
every
of
state
dollar.
had their own banknote. Like every bank issued their own banknotes, and we were trading, and we would have and oftentimes they would depeg relative to each other. It's insane to think about how we're kind of repeating the same thing with sort of private issuance. And Genius Act in a lot of ways parallels. Was it the Bank Act? Sorry, it was like during the Civil War when we standardized banknotes, we started taxing them at 10%, and then we also made it so that banknotes had to be backed by treasuries and bonds. In a lot of ways, the Genius Act parallels that, right? It's about standardizing stablecoins so we can understand and know what we're actually trading.
Yeah, I think that's one of my fears is that we don't standardize it at all. And so what ends up happening is the government just comes in and says, I'm just going to do it for you. Here's a CBDC. And, people just start using it and accepting it as the best solution. Do you have fears about that? I know this is a little bit sort of off topic, but it is an interesting question, I think.
When I was younger, I was much more, I would say, probably libertarian in the way thinking about sort of rights, and I still am, but I've become less of an ideologue around, crypto and what it stands. I think it's really important for crypto to have this element of being disconnected from centralized authority of whether that's governments or parties or individuals. Like I think that niche really needs to exist as a way for people who truly need to escape or need to like the original mission or vision was around the idea of like freedom of transacting money, right, on chain or across the world. Like those, like the cypherpunk deals and whatnot. Like I think that's really important to preserve, and we should always have a segment of our industry or people that continue to push on that front. But at the same time, there's huge efficiencies that get unlocked through standardization and through centralization. Like in the same way when we look at American history, it was a pain in the butt to have all of these various currencies, right? Like it was the interoperability issues were massive, right? And through standardization and centralization, we have a more convenient and efficient system. In crypto, I mostly see crypto as there'll come a time when we stop using the word crypto. It'll just be finance. And so this is just about the evolution or the advancement of finance and financial rails. And we're a part of it. And we've, Solomon will hopefully play an important role in that. But yeah, to your point, like, yeah, I don't know if fear is the right word. But I think it is really important to have a segment of this industry focus on or preserve the ideals that this was built on.
Awesome. That's thank you for that. That was pretty insightful. I think we're sort of over time a little bit, so I think it's time we start to wrap it up a little bit. So I think the last question I would have to you is more of an open-ended question where, like, do you think there's anything you want to say to anybody regarding stable coins, Solomon, or anything else you have in mind at the moment?
Yeah, I think when it comes to Solomon, it's been I would have liked it if we launched sooner. I would have liked it if things went faster. But one of the things that we've really focused on is putting something out there that I would want to use. That is really important as sort of like, hey, are you even a user of it? And B, would I entrust putting all of my capital or all of my stables or all of my holdings within the system? And when the answer is yes to both of those, or that is sort of like the guiding principle for me, is I want to have skin in the game where if I expect others to hold USDv and use USDv, I should be the biggest user and I should have all of my capital in some sense within that system to show that, hey, I can trust it, and I expect because of that, or that's a signal that you should be able to trust it. But it's not even about trust in that sense. It's about reducing trust assumptions. So a lot of the work that we're doing right now with the upgrades to the core program have been about creating the right sort of modular structure around permissions of who can and can't mint, guardrails around limits or limits or other logic that would prevent certain things that have happened in the industry so far from happening. A lot of controls in place that would make this a much safer system to transact with. I think what we've seen in the industry so far is just there's like this huge drive to do things very quickly or to do things fast, and I very much disagree with it, just because money is really it's when you're dealing with people's money, I don't think this should be taken lightly. I think it's a huge responsibility, and people should take that more seriously, especially as builders. So this is what we're trying to do at Solomon, and the goal is that we're going to build this trust by transparency around what we're doing, the reserves, the backing, the audits, and then showing that USDv is the default dollar that you should hold.
Awesome. All right. I think that was my last question. Thank you for coming on today, man. It was a pleasure. I think this is the longest podcast so far. I still, it feels like we could talk forever, but so yeah, thank you for coming on. Thank you to the audience for tuning in today. Thank you to MetaDAO and Dumbra for sponsoring the show. And yeah, I'll see you guys next time. Goodbye.
Thank you, 8-Bit. It was wonderful.